Good evening, everyone. December 27, Tuesday, December 27, 2022. We got to stop meeting like this. I'm actually thrilled that Green Candles agreed to co-host this room with me. You know, throughout much of the year, you've heard me refer to the car company that shall not be named. Lately, though, the car company that shall not be named is the one company that we've been talking about. It's the car company that must be named. We did a tremendous space on Saturday. Motorhead, who is an old Japanese auto analyst, gave a real tour de force on Tesla, joined by Jim Chanos and others. It is now 10 a.m. on Wednesday in Tokyo. I expect Motorhead will soon be joining us as the plot thickens with respect to the car company that is being named. Before we start, as is customary, just a little bit of remedial history. If you guys are bored, too bad. I need to do this for myself. So I went up and looked in it's a really good app to stay in history. So on this day in 1822, Louis Pasteur was born, one of the most important pioneers in medical microbiology. In 1932, Radio City Music Hall in New York City opened. Kind of amazing, 90 years ago. And in 1949, the Dutch transferred ownership of Indonesia. It became an independent country, I believe. A Dutch transfer of Indonesian sovereignty. So those are your three factoids for the day. Green Candle, how are you? I haven't talked to you for a couple weeks.
I'm doing well. I've had a little bit of travel woes trying to get back. But other than that, spirits are high and I'm doing pretty well. How about yourself, George?
Feeling pretty okay. Was off last week. Was on holiday in Aruba, although it was a working vacation from the beach. One should be well advised to stay in touch with me because when I go on vacation, volatility tends to pick up. So keep tabs on my schedule. And the market, after a tough few weeks for ETF earlier in the quarter, been on a real tear the last few weeks, so can't complain. This has been a truly annus horribilis for markets. Most have had a tough time. So I'm sure it's a year that most are looking forward to putting behind themselves and looking into the year ahead. So, we had a great space last night with Joe Fahmy, and I guess the rallying cry, what I just said is nobody knows nothing. I think the title of the room was Expect the Unexpected. And I find it interesting that, the question I ask everyone, will come up again tonight, I'm sure, is that regardless of what your point of view is, what is your conviction level associated with that point of view? And we're in such a period of heightened uncertainty that it's really difficult to have tremendous conviction about a lot of things. And so what I like to ask everyone is not, what your belief is, market up, market down, what sector you like or whatever, but how convicted are you about anything? And the market's truly humbled all of us. And, it's hard to have strong convictions about things, but we'll get into that later. So let's, where's Mr. Motorhead? I hope he shows up here before too long. So Green Candle, maybe you could just run with it for a minute or two. Maybe your thoughts, I don't know, what you found noteworthy from listening to other investors, or what did you hear on CNBC that made your head explode? What have you heard in recent days or weeks that really has caught your attention? Anything particularly noteworthy, Green Candle?
Yeah, I mean, I think what's been kind of on top of my mind just recently, just because of like I alluded to a little bit earlier, was just the extensive travel woes that we've been getting into, and it seems like, oh well, Motorhead is joining us here, so I'll let him kind of get into it in a second, but yeah, I mean, it just seems like the country is not exactly running on all cylinders these days, and it seems like it's pretty evident from the way that a lot of these flights have been canceled, and especially during one of the more I guess travel times of the year. And I agree with you here. I think your point about conviction is very timely, especially in such a volatile market. So I think in this next year, that's going to be extremely important for a lot of investors, is just to really know what you're investing in, because it might not always be a super easy and straight up ride as it once was a couple years ago. But welcome to the space, Motorhead, and yeah, thanks for having me co-host, George.
No worries. Hey, Motorhead, what is it? 10 a.m. in Tokyo on Wednesdays. Do I got you? Got that right?
Yes, it is.
Yeah,
Thank
you and
you.
I spoke. It was like 10 hours ago. I told you to get some sleep. So we're really grateful that you're back. It was truly magnificent to hear you on Saturday go through facts and figures, as opposed to the narrative chasing cheerleaders that you see in the mainstream media and, frankly, in a lot of big institutions. So let's get into it. What I really want to get into is the nuts and bolts, dissecting what's really happening at Tesla on a fundamental basis. If you turn on Bubble Vision or listen to, look at FinTwit, everyone wants to talk about Twitter and Elon. And by the way, I made a beef of that the other day. I'm going to go back there again. No, the guy's name is Elon Musk. Unless he's a personal friend of yours, call him Elon Musk. They go Elon. It's like when people talk about Michael Jordan. No, it's not Michael. It's Michael Jordan. Okay. So in any event, Elon is a polarizing. Elon Musk is a polarizing figure. He has a lot of detractors. Count me among them. And I really have to work hard to keep my emotion out of it. But as the saying goes, Motorhead, and that's one of the things I love about you. You're an analyst. Analyst. Liars figure, but figures don't lie. So as opposed to, I mean, I was watching this afternoon, late afternoon. They had Dan Ives on or somebody, or what's his name, the guy from Loop Ventures, Gene Munster. And Melissa, how much of Twitter's decline is due to Twitter? Of Tesla's decline is due to Twitter. I mean, completely missing the point. So, Motorhead, do you want to just maybe start off with, I don't know, give the elevator pitch as to what's really going on at Tesla and why you're so passionately bearish on the stock? Let's not talk about the CEO. Let's just talk about what's happening to deliveries, the order book, pricing, and as one old hand auto analyst to another, explain to the listeners how operating leverage works. And if you only got, what is it, a 25 or 27% gross margin using scam accounting, and you cut prices by 15%, and the operating margin is even less, like how the earnings could disappear. I'm putting words in your mouth, but I'm just channeling my inner Motorhead back to Motorhead. How earnings could disappear, and as opposed to, I think you said the gap estimate for earnings in 2023 for the street consensus is 17 billion. You're at 5 billion, and you think it's even possible they could lose money. So, Motorhead, without further ado, please take it away.
Thanks, George. It's a pretty dire situation for Tesla right now, and it's just amazing how slow consensus is to coming about it. It's actually more amazing how the stock price is adjusting to what reality is, and and the point is that Tesla just has.
Motorhead, I think we lost you. Can you unmute yourself? You're muted again, please. I don't know what happened there. The app is getting a little bit weird.
So,
Go ahead, Motorhead. Wind back about 10 seconds. We lost you.
okay, so I think it's amazing that the stock price is adjusting for what's really going to happen, but consensus hasn't. So it's like, forget about consensus. They're always too slow. And this time, believe me, it's not only for Tesla, but for other stocks too. The consensus is too slow to go down. But the main point is that they make most of their profits from China, and we got weekly data today that showed that they're probably on a 25% year-on-year decline in deliveries in China. Now, you could
Hold on.
say,
Wait,
yeah, okay,
wait,
that's
wait, wait. You said Chinese deliveries are running recently at about a decline of 25% year on year. Is that what you said?
yeah,
Wait a minute.
exactly.
This is supposed to be a growth company where deliveries are going to grow 50% a year from here to eternity. So what am I missing here, Motorhead? I'm sorry to tease you. Go ahead.
No, they're having a rough time in China. Now, look, this is been expected. It wasn't expected that it was going to be this bad, but the point is that they have they've got a COVID breakout in China, according to most of my friends, some of which are on the space today. They're saying that Shanghai is like Shanghai is their major region of deliveries. I mean, I think something like 30 to 40% of their deliveries are in Shanghai, and Shanghai is like pretty much in lockdown right now. I mean, it's either you've got COVID or you don't have COVID. Okay, so that's that. Okay, let's call that a one-off. Okay, so they've got zero order backlogs in China, and all the big Japanese car makers I spoke to this week are saying the same thing. China is shit, and the problem is that China supplies. If you strip out the exports, it's something like 60 to 70% of their profits globally. And if you add in like the losses that are probably being generated by Austin, their new Austin plant and their new Grunheide plant in Germany, they're China's even more of a profit weight for Tesla than ever. And the fact that they're down 25% locally year on year in December, and by the way, December is if for anybody who follows Tesla, they know that last month of the last quarter of the end of the year, you're going to be killing it in every country. The fact that they're down 25% year on year as of last week is really bad. I mean, for profits, it's really bad. So, what I think is going to happen is that by when they announce Q4 results in right now it's scheduled at around January 26th. I think you're going to see a huge, huge profit miss for Q4, and Tesla hasn't had a huge profit miss. I mean, I'm talking like double-digit profit miss since Q2 of 2019. So I think that the looking at the share price action, I think people are starting to realize that people who are selling, and I think people are just like trying to get out of this as quickly as
All right.
possible
Yeah. So
because
Motorhead. Sorry, all right. Let's break this down into constituent parts. So you were throwing some delivery numbers at me. What's the fellow Troy Tesla, whatever? He's going for a delivery number significantly below consensus for 4Q. Is that not correct?
yes,
Okay.
that's true.
And more importantly, the fourth quarter is almost over. So let's look ahead at 2023 because markets are forward looking. So let's say Tesla delivers about 1,000,003 units this year. Street consensus is for 1,000,009 next year. Could you just repeat for everyone's benefit that wasn't in the room the other day what your best guess is for deliveries for Tesla in 2023?
Okay, so I've got about 1.6 million units in deliveries, but the thing is, deliveries are irrelevant because they could make 2 million units if they drop the price enough. And this is the problem: is like everybody's become a car counter. You know, with Tesla stock, everybody has become a car counter. And so okay, so my delivery estimates are 1.6 million, which is about 17% year-on-year growth. But it's not the deliveries that count; it's the pricing that counts. And I just, like I said, I just spoke to three of the largest car makers in the world in the past 2 days, and they're all saying that thing. You know, their ICE vehicles are flying off the shelves, but with Tesla, they're at zero order backlog in the U.S. and they're at zero backlog in China, two biggest markets in their universe. And so, what really strikes me is that despite the fact that ICE is like coming back with a vengeance, Tesla, for some reason, has no orders in their two biggest markets.
So, Motorhead, let's now get into pricing because obviously, as you point out, if you cut prices enough, you can drive volumes. But if you think they're going to do 1,000,005, Michael, please mute yourself.
Sorry.
I'm going to remove Michael. I'm sorry to put you back in the audience because your speaker keeps going nuts on us. You're welcome to come up when it's time to talk. So, Motorhead, if you assume 1,000,005, 1,006 units next year, what sort of pricing are you using in your model? Because I was really struck by you pointed out recently of all the price cuts. And could you talk a little bit about pricing and what do you think? What are you modeling for pricing for next year?
Okay, so I've got pricing going down about um, got pricing going down about 13%, and this is mainly on the back of Europe and China because they're going to have to cut prices in both of those countries really big time. In America, they've got this Biden inducted IRA plan, which is the most ridiculous EV plan in the world. But the point is, they will make some money from that. In terms of pricing, in terms of pricing power, they're gonna have a tailwind from that. But everywhere else in the world, they're down. And I think that the big thing here is that they might see some pricing tailwinds in America, but it's the least profitable market for them in the world. And where they're the most profitable, which is China, they're going to see pricing headwinds, big time, big time. I mean, immediately as of January 1st, there are subsidies that are being removed that amount to something like 3 to 4% of their pricing.
Right.
Um,
So
right.
Motorhead, putting this all together, if you've got units up, say 15, 20%, and you're going to plug in what type, just give me a global pricing guesstimate number, down 10 or something for next year? Like, what's a reasonable number? Blended.
So I've got I think 10 to 13% is what I'm looking
Okay,
at
so
in my.
so so you put that through the blender, the food processor, and that only gives you a total revenue growth of what, 5% or something like that?
I've got total revenue growth of 13%.
Total revenue is up 13. So they're going to do what, 80 some odd billion this year? What are your exact revenue numbers?
Yes. So I've got them doing 81 billion in all of
Right.
2022, and then I've got them doing like 91 billion in
And the and
2023.
the, and the street
And
consensus is what, like 115 or something like that?
the street consensus for revenues is a lot higher. Um, the street consensus for revenues next year versus my 91 billion is not that much lower. It's sorry, excuse me. It's 114
Okay, so
billion.
stop right there. If you're at 91 and they're at 113, it's a $22 billion shortfall. You then plug in, the gross profit contribution that would come from that. That's before we even get into your assumptions about cost of goods sold. But just the sheer, if they're running with a 25% gross margin or 27% gross margin, whatever the number is, I don't have it to commit it to memory. You have a $22 billion revenue shortfall. Just to start the conversation, I'll spot you $6 billion shortfall in EBITDA. Now let's go to the income statement, particularly the cost of goods sold. You speak a little bit about semiconductors and also about explain to people, this is not readily apparent, certainly wasn't apparent to me, but explain how the fact that car prices got jacked up so much, how that differentially benefited Tesla, and now that the movie runs in reverse, how it's going to hurt Tesla. So speak to semiconductors and also to used car prices, Motorhead.
Okay, so the semiconductor crisis, the chip shortage for auto stocks, auto companies started in exactly when the pandemic hit the entire world, which was Q1 of 2020. And the point is that most car makers, I mean, they're taking there's such a huge shortage of microchips for automakers that they're taking. I'm not joking you. This is like real. They're taking chips from water heaters. Like Toyota and Honda proudly, and Subaru told me that they were proudly taking semiconductor semiconductor chips from water heaters to make up for the shortage in chips that they have for their cars. And it took them about a year and a half to get that safety to get the safety approval for those chips. What Tesla did was Tesla's really, really fucking nimble. I mean, do you want to drive in that car? It's like I don't when I get an Uber and it's a Tesla, I cancel it, and it's because of the fact that they took semiconductor chips probably from like fucking hair blow dryers, and the thing is they don't approve it for safety, and so they just want to sell as much as they can produce, and they've got this 50% year on year growth target. And so the bottom line is that Tesla is trying to at least grow output by 50% year on year. They backed off and said that they can't grow deliveries that much in Q4 because of, it's true. They had a lockdown in Shanghai and all that. But the point is that the bottom line is that ICE vehicles, they're flying off the shelves. They're flying off the shelves. And for some reason, I think it has to do with cost, with pricing. Tesla vehicles have a zero backlog order both in the US and in China. And that's really bad for Q1
Right. And
2023.
Motorhead, you really captured my attention, my imagination when you were explaining to me how when you had a shortage of new cars in the last couple of years, I mean, you should tell the story. It's your story. How explain how differentially the fact that Tesla doesn't have a dealer network and the ICE manufacturers do, how that really benefited Tesla, and now the movie's running in reverse, how on a relative basis it's going to hurt Tesla. So could you go through that exercise?
Yeah, great point, George. And I confirm this once again. Okay, so I spoke to Toyota yesterday and Honda the other day, and the point is that used car prices are plummeting. I mean, you look at CarMax's results. I mean, they missed EPS estimates by 65% last week. And the point is that used car prices are going down. And when used car prices go down, it's a leading indicator for new car prices. It means that people are just not ready to buy cars as much as they used to be during the pandemic. And so the point is that there, if you've got used car prices dropping by, I mean, I think as of November end, um, used car prices were down like 25%. So what happens is that during the pandemic, car dealers have been boosting the price of their of the cars that they sell. So, for instance, A Toyota RAV4 MSRP, let's say it's $30,000. The car dealerships who deal Toyota, vehicles are boosting that by $13,000 at the high end. And like the Mach-E, the very popular, EV made by Ford, that's like getting, $5,000 to $10,000 markups at the dealerships by, five to $10,000. So what's happening is that the dealers have price gouged during the pandemic when there was a shortage of new vehicle inventories because of the chip shortage. And what's going to happen is that the dealers, and I've confirmed this with Honda and Toyota, that the dealers will take the hit. So if cars pile up in their dealership lots, they're going to come down from $10,000 to $15,000 versus MSRP on the most popular models, back down to MSRP. And so I asked Honda, I'm like, okay, what happens if it comes down to MSRP and inventory starts piling up? They said, well, we'll offer them again, because the OEMs have really, all they've done is cut their dealer incentives. Dealer incentives are like $1,000 to $3,000. So the OEMs start just lowering their dealer incentives, and the dealers take most of the hit. Tesla has a direct sales model. They've raised their prices 27% since the pandemic started. If that goes down, and everybody's sitting there, including myself, looking at Tesla making 17% operating margins, excluding ZEV credits. It's something I've never seen before. I'm astounded by it. But if they have a direct dealership, direct sales model where they don't have dealers and they have to take 100% of the hit from the price cuts. Hello, George. Do you hear that?
I can hear you, Motorhead. So I think I don't know, you got accidentally muted. So if you want to keep on going.
So what I'm saying is that because of the chip shortage, and new cars are in low supply, the MSRPs have been boosted at the dealerships. So all the car dealers, and you saw CarMax's results last week. They were horrible. They missed consensus by like 60%. Car prices are coming down, and the major OEMs I spoke to this week have confirmed that their prices are actually still going up. So ICE vehicles are selling like they're flying off the shelves. But for some reason, Tesla has a zero backlog order in the United States, and they're looking at a really stark Q1 for 2023, both in the U.S. and China. And the point is that if prices come down, and everybody says, oh well, this Biden IRA, EV subsidy is going to help Tesla. It will, but it's only for a select crowd, and it's for a select crowd that makes, if you're the single, person in the family, it only kicks in if you make, over 150.
Sorry about that, guys. Hold on 1 second here. We get the room back together. David, can you hear me?
Sure.
I'm sorry about that. I don't know what the heck happened here to this room. This is quite
David.
annoying. So he was really on a roll there. And the thing is, instead of just having opinions, if you actually go through the numbers as he does, you're kind of inevitably led to a conclusion which is at odds with the consensus view. So that's what I really like about him. He's a real analyst. He doesn't just start with the opinion. It's like how did he get to his answer? It's like when you're in high school math, show your work. And so while we're waiting for him to come in here, as I think he was starting to explain, he's got a delivery number which is well below consensus. A million. And Motorhead, come back up here. I just sent you an invite to speak. Sorry about that, Motorhead. So if you take his inventory number, his delivery number of 1,000,005, 1,000,006 instead of 1,000,009, and then throw in pricing, which is down 10% globally, at the gross profit line, you've got you're very challenged, and then you start throwing in increasing overhead. So Motorhead, we're working down the income statement. So we have your 1,000,005, 1,000,006 unit delivery number, which is only up 15-20%. You got pricing down 10, and then you were talking about the cost situation with increasing overhead from the opening of the two factories, and then also differentially how they're being hurt by the decline in prices because they benefited from the rise in prices. And so Motorhead, I mean, I don't want to get too much into the weeds on this, but maybe just move the ball further along. So I think you explained the other day, consensus gap for 2023 is around 17 billion. If I recall correctly, you were saying what, about 5 billion or something like that? Was that kind of your number?
Yeah. So because they're going to see a price cut, the price cuts are inevitable, and I think even the Tesla fanboys are looking at a price cut. But what they don't understand is the operating leverage is what you were touching on, and the point is that when you have two new factories, and Tesla, just mind you, their accounting is really dodgy, and I've never seen a car company do this before, but they depreciate their fixed costs and their startup costs. So when you start a new plant, you've got machinery and equipment, you've got the building, which is not that big of a deal, but the point is you've got all these startup costs that should be booked, and most honest car makers book those costs up front. We haven't seen those costs because Tesla books those costs on a per unit basis. So the more they increase the production in their new factories in Texas and in Germany, you're going to see costs of units sold go up. So what I'm seeing is they may be able to do 1.6, or let's say they can do consensus of 1.9 million units next year, but it will come at a huge cost, which is price cuts of around 10 to 20%, down year on year. And if that happens, there's a chance that Tesla makes a loss in I would say probably Q2 or Q3, and Q1 is already is going to be a shit show. But consensus is now at 17.5 billion in GAAP net income for Tesla next year, and based on just 13 based on 1.6 million deliveries next year, 1.5 million deliveries. I'm only seeing about 11 billion in net profits. So this is a company that is valued on growth, and the profits are going X growth. I've seen this many times before. When you've got a growth stock going X growth, it's a disaster.
And Motorhead, if you look at, remind the listeners that it still has a market cap of 345 billion. 345 billion. For that sort of profit level with the possibility of a loss. And also keep in mind, 100% plus of their profits come from China.
Yep.
What multiple do you put on a freaking Chinese automaker?
Well, I mean,
so if the earnings don't kill you, the valuation compression will. I mean, to me, this is just a complete lose-lose. And so let me put it another way, Motorhead. If you were to try to argue against yourself, what would that argument sound like?
well, I mean, I continuously look at Tesla's valuation. So my favorite car maker in the world, and which I use, by the way, I run 100%, automotive, EV fund that is based around Tesla. So the biggest hedges I have against Tesla is the biggest one is Toyota, and Toyota is actually, I mean, they're in the doghouse this year because they're bailing out their suppliers. But this is sort of, it's like it's so Japanese, but it's like, hey, we're spending, tens of billions of dollars to support our suppliers so that next year we can grow profits. So if you were going, is the way to look at Tesla in my eyes is their market cap versus Toyota, and they're still at this point about 1.9 times the market capitalization of Toyota, which is ridiculous. Toyota makes, like, in good times they can do 11 million units a year. I mean, Tesla is estimated to do about 1.9 million next year. So it's like,
Right.
it's ridiculous.
And then in similar fashion, the metric I always like to point to, and for those of you that don't know me, I started my career back in 1981 as the auto analyst at Fidelity. Been following auto stocks for 41 years. I was fortunate enough to be the auto analyst when Peter Lynch went to Detroit and bought Chrysler and Ford. I remember sitting with him, got a whole day with Lee Iacocca. I take no credit for that. I just was a young buck, didn't know anything. I just shut up and carried his bags. But I've been following auto stocks for 41 years, and one of the things that you said, Motorhead, one of the key points that really resonates with me and most investors miss is operating leverage. I mean, when things are bad, it's often one cannot imagine how good they can become, and when things are good, you can't imagine how bad they can become. And so when you have a company which has a 25% gross margin or thereabouts, even allowing their scam accounting, and you start taking an axe to profitability of cut prices by 10% or whatever. That's just on the gross margin line, and that flows all the way down to the operating margin line. You can see those profits disappear pretty quickly. Another measure I like to look at, and I know we talked about this the other day, Motorhead. If you look at EV to sales or price to sales, I think the average auto stock sells at what, 0.5, 0.6 times revenues, 0.7 times revenues, something like that. And even now, at this, even though the price has fallen mightily, Tesla's still selling at 4 times sales. So, I put the name of the room up there deliberately. Well, I did it for two reasons. One, to be a wise guy. No one would expect anything less from me. Because there's that annoying fellow who keeps running these rooms relentlessly every other day, why Tesla will triple this year. So I thought, why not be a jerk and put why Tesla might go down 80%. But actually, there's some seriousness behind that. If you plug in your types of earnings numbers and it's X growth, and we all know valuations expand and contract in line with growth accelerating, decelerating. But you put this thing on a lower multiple of either earnings or or revenues. I mean, just to start the conversation, instead of 4 times sales, put it on 1 time sales. It'll still be at a premium to the other auto guys. I mean, if you've got, that would give it an $85 billion market cap, $90 billion market cap, in comparison to the $345 billion it sells at right now. So, say it's down 80%. Oh, I exaggerate, only down 75%, right? And so, to me, I think I tweeted this out. I'd be surprised, not to take a victory lap, but I tweeted out in the second quarter of this year when Tesla was three something that it was going to go to 100, adjusted for splits. And I put that the wise guy tweet today saying, hey, only a few days left to go. Do you think we're going to get to my 100 target? So I think I speak with some credibility on this subject. And I will just say right here, right now, at 109, I'm very, and listen, not investment advice. I could be wrong. It won't be the first time. It surely won't be the last time. But when you play with the numbers, as you do, it's very easy to see how this stock could be 20, 30, $40 a share. And in fact, it's impossible, I think quite likely. It's difficult to see how it doesn't at least get cut in half from here. And the thing is, you have all the fanboys. Everyone's following the narrative, the story. Oh, how can it go down so much? Elon this, Elon that. They don't do any work. I mean, they had that space the other day. I don't think you were in it, Motorhead, because you were sleeping. But, that was a not so veiled profits warning from Elon Musk. He was going on about Jerome Powell and Fed policy. And as Jim Chano said in our space the other day, he basically told everyone it was tantamount to him saying Tesla's cyclical. It's a cyclical Chinese automaker
Yep,
that does
exactly.
not deserve to sell on 4 times sales.
No.
So if we just start with 1 time sales, I'm just picking a number, and then plug in whatever you want. I mean, you know, as one of my favorite movies, Margin Call, Jeremy Irons, Mr. Motorhead, you're the analyst here. No, yeah, I understand you about auto stocks. Motorhead, please explain to me why Tesla isn't a $30 stock. Pretend I'm a golden retriever or a small child. I mean, to me, it's just mind-boggling that it still sells where it does, and it's tantamount. It reminds me of the line from George Soros. One of Soros's great points was one of the ways to make money, one of the many ways to make money, a brilliant investor, was to try to have a variant perception, try to figure out what is it the market believes that's not true, or you think is not true. But more importantly, or equally important, try to determine when the market will figure out it's been had. I mean, I will plead guilty to being too bearish too early on Tesla, and I think you're the same way.
Yep.
But that doesn't disqualify one from having a legitimate opinion right now. And so the point is, trying to get the timing right in this whole thing. When will the market realize it's been had? And Motorhead, how would you respond to the assertion that we're kind of about that time right now? That we're in that phase of discovery, in that phase of awakening. What would you say to that?
I would say that I wish I had more shorts in Tesla right now. I did cover a lot last week. But the point is, here's where we stand, and this is why I think that if you're looking to short Tesla, there's still a huge amount of downside. So the average 10 car makers under in terms of market cap underneath Tesla, which includes Toyota, Volkswagen, Daimler, BMW, all those big guys, they traded an average EV to sales of 0.38 times. Okay, I mean, this is like market cap plus net
wait,
cap.
Motorhead, do you mean I was being too generous when I said 0.5 or 0.6? You're saying it's 0.38?
It's 0.38 as of today. And if you give
Motorhead, talk dirty to me. Keep going.
so if you give Tesla on now these are my estimates, okay? I mean, but it's revenue, so it's like not that huge of a difference, okay? I mean, I'm looking at like 91 billion, the street's looking at 113 billion. You still get, like, on my estimates, you've got a $39 $39 fair value price for Tesla. Now, what I look at more, I think that the easiest thing to look at, which is the easiest thing to forecast, is price to book value. And the average automaker, Toyota down to, Nissan and all that stuff, is trading at about 0.7 times book value. Volkswagen trades at 0.4 times book value. I mean, this is incredible. And the reason why is because these guys are cyclical companies that blow themselves up, regularly, every 5 to 10 years. And so, of course, they trade below book value. And so should Tesla. And if you give Tesla 0.7 times book value, they trade the fair value is $8.
All right, let's stop here. I think the referee's got to call this fight here. This is cruel and unusual punishment. All right, so it's Motorhead. Let's just stay there. This has been awesome. Let's open it up and let's get this party started. Let's go first to the guy with the best name, the best handle on Twitter, Nostra House of Dumbass. Always good to see you, Nostra. What's going on? Please unmute yourself.
Hey, George, how's it going?
All good. What's up, my man?
My question is in relation to the price movements in Tesla. It's looking to me like momentum is really picking up, and a lot of the retail players are getting margin called. And I'm not sure if you would know this or not, or have a rough estimate because it's not public information. But around what price do you believe Musk will get margin called? I've talked around, and one guy came up with like $81.
All right, so hold on. Motorhead is equipped to answer that question. He directed my attention to a fantastic thread. Motorhead, why don't you talk about that thread and maybe even put it up in the nest when you get a moment to breathe. Motorhead, please take it away.
There's an account called Jabberwock, and this guy's a very diligent, numbers guy. He came up with the estimate that Musk's margin call is about $114. Let's discount that and say it's maybe $100, but we're getting close to that level. And what we do know from public information, and by the way, Jabberwock did these estimates based on public information. But as of August, the last proxy statement that Tesla published, Musk has about 89 million shares pledged on margin. So this is before the Twitter deal closed. So we don't know whether it's more or less. I would guess it's, at least the same, if not more. And so what you have is an event where Morgan Stanley, which is probably the main provider of that margin, selling $89 million in the open market.
Yeah, and Motorhead, maybe go into a little bit more, but from memory, because I read the article after you pointed me to it. The thought was that the loan to value ratio was maybe 20 to 25% or something like that, and we don't know the exact covenants, but let's just ballpark it. And so if the price gets cut in half, which it has, all of a sudden that goes up to 40 or 50%, and unless he's got more cash to put up, he or Morgan Stanley becomes a forced seller. Is that about right, Motorhead?
Yeah, it is. It is, and so this is the thing is from that thread that Jabberwock put out last week about where Musk's margin call would be, which he estimates is $114. I mean, we're below that today. He suggests that if you read through that whole thread, there are a lot of people saying he doesn't have any more cash, and it sort of is true. I mean, he 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 provided some credit to that margin at Morgan Stanley back in I think 3 or 4 years ago when he sold when he like there was this big these big headlines in the press saying, oh, Elon Musk is not living in a house anymore because he sold 5 of his houses in California. He did. And he did that to maintain his margin standing at Morgan Stanley mainly. And the point is like, what else does he have to sell right now? I don't know. And
Yeah.
you hear about SpaceX, right? He's there was some news that he was selling, some more SpaceX stakes and whatnot. I don't know, but the point is, he's really running thin. I mean, if they margin call him, I doubt that he has that much cash to come up with aside from Tesla stock.
Right. And so let me contextualize that. Put it another way, he's asset rich and cash poor. He's asset rich insofar he owns Tesla shares. Just like FTX had a lot of assets in terms of FTX coins. And so, when you look at how Musk frequently uses one company to subsidize or cross collateralize another company. So go back to the demise of Solar City a few years ago, where he couldn't allow it to go bust. So what happens? Tesla comes in and buys, takes over Solar City. But of course, who was buying the Solar City bonds at a discount just before it got taken over? Kimball and himself. But I digress. Musk is. I think it's. We don't know, and so everything we talked about so far, we kind of believe. Now I'm going to make a complete supposition. Imagine for a second if it is as we say it is, and he's all levered up with no cash. I would like to go back to last week's space, and he took great pains to promise people. And if someone has the thread, please put it up in the nest. Someone, I can't, it was Bloomberg. There was a great tweet going around. It showed there was a chart annotated showing the 4 or 5 times in the last year or two when Musk sold stock, and on a couple more than one occasion he had said he wasn't going to sell anymore. So there's no reason to take what he's saying at face value. But even if you take what he's saying at face value, I would suggest there's a potential for hanky panky right here. And this is a question, not a statement. It's a question. But Motorhead, think about this for a second. What if it turns out, Morgan Stanley, he's got all this leverage on with his Tesla position at Morgan Stanley, and it's Morgan Stanley who's liquidating the shares. So technically, when he says he's not selling any more stock, He may not be the one pulling the trigger. Maybe it's Morgan Stanley. So Musk has shown time and time again a willingness to be too clever by a half, or how should we say it in a more erudite, polite fashion, be parsimonious with the truth. And nothing would surprise me. I mean, especially given he has no credibility. Anyone who believes when he says he won't sell any more stock, well, you might want to go look at that chart of the last year of when he sold stock. I mean, what part of that would you agree with, disagree with, or would you endorse Motorhead?
I think that I think we're close, but I don't believe it was $114 as the Jabberwock account estimated last week, and he's got solid maths behind this. But I think that when we get to the level where Musk might get margin called, you're going to see a huge gamma squeeze, and we haven't seen that yet.
And
So
Motorhead, by the way, I want for everyone's benefit in the room, it doesn't matter whether it's 120, 110, 100. Look, we don't know. All right. Here's the important point, and we all know this as traders. When the market smells blood in the water, Motorhead, what does it do? When the market smells blood in the water,
yeah, I mean they
it
open
it,
their jaws bigger.
it attacks. So the market will find that level of the margin call if it hasn't already.
Yeah,
And
it will.
so to your point about the gamma squeeze in reverse, yes, that's coming soon to a theater near you. And the other thing I'd like to point out, we're all anchored. It's what the psychiatrists refer to as a recency bias. Everyone's like, oh, how can I sell Tesla at 140? It was at 160. How can I sell it at 120? It was just at 135. Yada, 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 yada. Okay. You zoom out, as our crypto maxi friends would say. And the bigger scheme of things, you and I had this conversation the other day, Motorhead. If you came down from planet Mars and you weren't triggered by Musk's personality, and you didn't think it was a great company because you made a lot of money in it, and you didn't think it was a bad company because you bought it higher up and you're underwater, and you just looked at the fundamentals, you didn't look at the chart, you had no idea what the history of the share price, you don't listen to CNBC, and someone says to you, okay, here's this car company. They're going to sell 1,000,003 units, 80 million in revenues. These are the profits. Bada bada bing, bing, bada bing. Growth is slowing. Blah blah blah. What should it sell at? And you do your comps and do your analysis, and it's like which one's not like any other one compared to all the other companies. You said, well, yeah, I don't know. This should be 20 or 30. I don't know, 40, something like that. I don't think 109 is the number that would be top of mind.
No,
So
I agree.
I just and so what's happened is this is like a hot air balloon, which is now rapidly deflating. And people are like, oh, it's oversold. I can't sell it. And people have heard this bad joke from me before. I'm not the one who made this up. It comes from the great Frank Teixeira, the retired chartist from Wellington. What does oversold mean? The true definition of oversold is I forgot to sell it. I still own it and it went down. Okay. And what does overbought mean? Overbought means, oh, I didn't get around to buy it and it went up without me.
Right.
So the term overbought and oversold, I think, as our British friends would say, that's bollocks. It's crap.
But
And
George, let me just remind you, and this is very important for the audience. There has been a car maker that's done this, and it's Subaru. Okay, between 2010 and 2016, Subaru grew, and it's phenomenally similar to Tesla. They made 500,000 units a year, and then they scaled up to 1.2 million a year, and their operating margins actually hit 17%, which is Tesla topped that in the last quarter. But the point is that I sat down and I talked to them. This is in June, at the end of June, and I said why did you go from 500,000 to 1.2 million units and made 17% margins? Now you guys are making like 4% margins. I'm like, what happened? How does this happen? And they gave me a great answer. They said we were operating as a 500,000 unit company per year, and we grew to 1.2 million, and we didn't grow into that space. I'm like, what do you mean? And they said, well, we just didn't manage it well enough. So what happened with Subaru was, not only did growth slow down, because nothing, and this is the thing with Tesla, nothing goes up in a straight line that doesn't come down. And so Tesla's been going up. But what happened with Subaru at their peak in 2016, 2017 was that they had horrible quality problems. And so you started seeing huge hits to their P&L based on quality issues. And I think, if there's any car maker that has quality issues, it's Tesla. And I think,
Motorhead. What was quality the ultimate undoing of Subaru?
no, it wasn't. It wasn't. It
So
wasn't.
so what was it? Because Subaru was such a hot brand, they had a real niche, and I was not aware they kind of gone off the rails so badly the last few years. But what undid Subaru?
It was quality, actually. It really was. But also their unit growth also slowed. But as the unit growth slowed, you had declining volumes, and then you had warranty costs. And so it's the warranty costs that really killed them.
All right. Motorhead. Now we're cooking with Crisco. Here we go. So Motorhead, I want to talk about two things specifically on Tesla. One, could you talk about the extent to which Tesla under provisions for warranties, like what their typical provisions are, versus what their actually ongoing warranty expenses wind up being? Like they have to keep repairing all these freaking cars, and then also, how their warranty reserves provisions compare to other automakers. So one question is warranties. The other question is, and a smart member of the audience reminded me of this, and it's useful ground to go over. Does Tesla have anything special? Do they have any moat? And what about the self-driving cars? And where do things stand with respect to, whether self-driving cars are ever going to become a real thing anytime soon for Tesla? So first, let's start with the quality and the warranties and the extent to which they're under provisioning for warranty expense.
Okay, so the quality is shit. It's complete shit. This. I'm not going to mention which car maker said this to me, but they tore apart a Model S and they said, okay, this is a pretty good product, but this is back in 2000, 10, 2012. They tore apart the Model 3 and they said, this is the biggest piece of shit we've ever seen. And so they're I'm not an expert on this. I think the guys on Tesla Q on Twitter, or thereabout, Lewis Carruthers and Stanfield Capital, those guys are the experts on the warranty front. But they are definitely underestimating what the warranty costs will be. And if you talk to a lot of fanboys, you'll hear that they have 3 outstanding recalls right now from NHTSA, from the regulator, and my Tesla fanboy friends are saying that they still have yet to get a date for when they can take their Tesla in to get the 3 recall issues fixed. So what they've been doing is they've been growing their unit volumes, building factories and all this shit, but they haven't been spending to service their fleet. And this is what the big risk with Tesla is that their fleet has grown so much, but they have not grown their service centers as much, which means that we're coming close to a point where, and this happened in Q1 of 2019, where they actually, Q1 of 2020, where they actually took a $500 million hit on the Model S and X residual value guarantee loans that they had out. But you're going to see more and more stuff like this come through, and they don't measure it in their automotive gross profits. They measure it in their service and other division.
Right.
So this is why Tesla's gross margins are bullshit, which is
Right.
why
Yeah, exactly. Which is part of the scam, because all the gullible analysts they just take that bogus gross margin and they as the units grow 50% a year, they gun the gross profits that way, and it's the recurring non-recurring bullshit happens elsewhere in the income statements. Oldest trick in the book. So Motorhead. I also was reminded I got to ask you about used Tesla prices. Now let's go. Average Joe, just hold on. We're doing this in order here. So let's talk about. Does Tesla have anything special? Is there anything proprietary? Is there any moat? I mean, talk to me about. I mean, they don't. I mean, leading question. Of course, I don't think I think the answer is no. But talk to me about what Panasonic tells you, other auto companies tell you. Does Panasonic? I mean, okay, give Tesla credit. They're the first ones there, fine. But do they have a moat? Do they have anything special? In our fully self-driving cars likely to be a thing anytime soon for Tesla?
Yeah, okay, let's talk about like what they have that's special. Okay, I mean, they do have really sexy electric vehicles. Okay, so I mean, in the old days when you thought about electric vehicles, you thought about the you thought about the first electric vehicle that was brought out by GM, which looked like shit, and then Honda, which looked like even bigger shit. But the thing is that Tesla made electric vehicles cool. And so here's the thing. Here's the thing about Tesla is that it because you've got electric motors, the acceleration is completely amplified. So the first thing you do when you drive a Tesla, you punch the pedal, and the acceleration goes off the roof, and you're like, oh Jesus Christ, this is like insane. But I mean, I got the same thing when I drove a 997 turbo, from Porsche. And but the point is, what I'm trying to say is, like, yes, they have a great design, and because it's electric, people are like, oh my God, I don't have to spend $150,000 on a turbo Carrera, and I get this kind of acceleration. So okay, they've got that, but you know what, everybody's doing the same thing. I mean, electronic propulsion leads to fast acceleration, and everybody's coming around to that point. But the point is, do they have a moat? Maybe their charging facilities, the fact that if you buy a Tesla, you can drive cross country in America, but who the fuck cares? So, I mean, I would say that, that's about it in terms of moat. And full self-driving, by the way, full self-driving. I mean, this is going to be litigated I mean, whether you're pro Biden or anti Biden, pro Trump, whatever. The one thing that's good about the Biden administration is the Tesla fanboys have already insulted Pete Buttigieg. And Pete Buttigieg is in charge of NHTSA. And NHTSA is the one who's now digging into full self-driving. And if you saw the news last week, this was very underreported on Twitter, in my opinion. The fact that the California Senate, the state Senate, said that labeling full self-driving for what it is illegal. And so, I mean, it's sort of game over for full self-driving. And then just to make a note, regardless of what they call that option, which they charge a lot of money for, it is the weakest on the market compared to Waymo, compared to Cruise.
Yes, some more. How much money? How much does Tesla get for that? How much money have they taken in? If NHTSA rules the wrong way, could they be forced to cough up a lot of that money and have to refund it?
Oh yeah, I mean, there are class action lawsuits already, but I mean, so I've added it up. So they give you their penetration numbers. By the way, the one of the best accounts I follow on Twitter, and he's a fanboy, but Troy Teslike, and I actually pay him on his Patreon. Because he's got such great data. But anyway, he's got the take rate on full self-driving and autopilot. So autopilot is what it used to be called. Now they call it full self-driving. And now, the California Senate says that they can't call it that. If you take all of that and you add it up, and you take the price points, because they raised it from like $5,000 to $15,000. But the point is, if you add all that up on the take rates, and it's mostly in the U.S. because they actually cannot sell full self-driving in Europe. So it's mostly North America. And the take rate has gone from a peak of like, I think it's 49% down to now 7% globally. And that's like all America. It adds up to about $3.5 billion just in sales. So if they had to write off those sales because, they got ruled against by the NHTSA, you're looking at a $3.5 billion write-off to their equity.
Okay, one other question, then I want to go to Arjun. It's been noted, we talked about it in the room the other day, that the secondhand values, Tesla used car prices, are declining at a particularly noteworthy pace. Talk about why you think that's happening and what does that mean?
It's really hard. So, like I told you, I spoke to some of the biggest automakers in the world in the past 7 days, and it's hard to understand. I mean, the ICE vehicles are flying off the shelves. I mean, and they're raising prices, but for some reason Tesla is lowering prices, and my gut feeling is that the Model 3 and the Model Y, and we've already seen it with the Model S and X. These guys are dealing with 4 models, and 95% are the Model 3 and the Model Y, and those models have become old in the tooth. And I think my gut feeling is that the market has been saturated for those kind of cars.
Yeah, I mean, you look at those things; they were kind of cool when they came out, but they're really pretty tired and sorry looking, if you ask me. That's terrific, Motorhead. All right, let's go to Arjun, and then we're going to do Globro, and then Average Joe. Hey, Arjun, good to see you. What's up, man?
Hey, George, thanks for having me. And Motorhead, appreciate your being here as well. George, I think if this has been discussed, I'm sure you'll let me know. But I think part of Tesla's valuation was explained by the idea that by some year, 2035 or 2050, depending on the country, and by 2050, the world, based on climate policies, we would somehow be 100% electric vehicles. So even if there's more competition, et cetera, Tesla would still have some decent share of that. I think, George, you'll notice this when we go back to past bubbles, whether it was Enron, whether it was WorldCom, the company that defined the new paradigm that had the massive valuation during that period forced the competitors to adopt some portion or all of the strategy. And I think we've seen that with Ford and GM and some of these legacy guys, maybe with the notable exception of Toyota. I think a couple questions. If Tesla's valuation continues to deflate, Motorhead, I'm an energy guy, as George knows, not an autos guy. Do we think Ford, GM, and the other guys will back off some of the sort of EV or bust kind of strategy? Two, my personal view is if you look at this like a growth investor, what is the total addressable market for Tesla? There's a big difference between having a 100% electric vehicle share of auto sales in 2050 and maybe it only being 10 or 20 or 25%, or whatever year you want to pick, 2030, 2040, 2050. Again, this idea of moving to EVs has coincided with free money and these climate policies. And as both those things go away, most notably the free money, but also this idea that somehow EVs are climate friendly, they may be, they may not be. I don't think they're the sole answer. How do we think about what the addressable market is for both Tesla, and then do we think the peer companies back off on this sort of EV or bust kind of strategy that it looks like some of them have also adopted? Thank you.
Yeah. So Motorhead, go ahead. I have go ahead, Motorhead. I got a shot.
So quick answer is that I think Toyota is the smartest. I think they're the sharpest knives in the drawer. They've put their hands into fuel cells, hydrogen, and they've put their hands into hybrids, electric vehicles, and they're keeping their foot in the waters with ICE vehicles. Okay, and the reason why is that Toyota's chairman came out, he's the son of the grandfather. He came out and says, like, if we were to all plug our cars into our houses tonight, the electric grid would like break down. And it's true. And believe me, Japan's electric grid is way better than the electric grids that you guys like have in the places you're living, because people underspend in the US for infrastructure and whatnot. So the point is that I think the dust will settle on hybrids, plug-in hybrids somewhere around the road. And the reason why is simply because there's not enough lithium. And by 2025, 2026, you're going to, and everybody knows this, it's not in the news as much, but lithium will become completely scarce unless you already reserved orders. I talked to Honda yesterday. They actually locked in a long-term deal for lithium, and so they're all set to make 500,000 EVs in 2026. But the thing is that coincides with a time where lithium supplies will go into a deficit. So when that happens, what I'm predicting, and I don't know how anybody could argue with this, is that EVs become like Ferraris. They're only for the rich.
Another point, Arjun, another angle that Jim Chanos, very astute investor, usually the smartest guy there, he makes an excellent point, and that is if you look at Tesla's sales and the average selling price, I think globally, and Motorhead, you'll jump in here because I know you know the numbers and you heard Jim recite it. I think globally, the entire luxury car market is only, I think, 4 million units, a number like that, and defined as over $45,000. And Tesla already has unit sales this year of 1.3 million. And so there's a limited, the luxury car market is limited in size. And so if you start thinking about this idea that their units are going to grow 50% a year, for the next few years, they're already 30% market share in the luxury car market. And then furthermore, Motorhead could put numbers on this, but Motorhead, give me the numbers again. Like a $50,000 car, over there is really like a 200. They talk about China is like a $250,000 car here, given the difference in per capita income. So, there's a limit to how far they can push this. And
no, I mean the biggest statistic that needs to be piped out. If you're short Tesla. Or if you're long Tesla, the biggest statistic you should be looking at is that the Model Y capacity, which they built 2 factories for in Germany and Texas, and they actually expanded Model Y capacity in China by 30% in August. And you add all that up, and it comes to 1.5 million units. Now, the luxury SUV segment, meaning prices between $60,000 and $80,000, which is what the Model Y is priced at, was about 2.4 million units. So Tesla has Model Y capacity that equates to 60% of 2021's luxury SUV segment. Now, if that market doubles, they still have 30% capacity aimed at that market. And everybody's got a target on Tesla's Model Y. And you've got more luxury they call them CUVs, compact utility vehicles. You've got more CUVs coming out next year than you've ever seen ever before, and it will become the worst performing profit segment in the car market.
So I agree with all your points, especially on the power markets, critical minerals. One quick follow-up. So if you look at the mandates for California by 2035, I think New York State, various European countries of 100% by various years. Do you think those mandates go away? They get ignored? Different governments change the mandates? Those mandates are out there, just not real?
They're not real, and they're going to go away.
Thank you so much.
Arjun, great questions. I wouldn't expect anything less from you. All right, we got a great stage here, and we got a backlog of people that want to get up here. So if you're not going to ask another question, I ask you to voluntarily step down. I want to do Globro, Average Joe, and then Marion. Globro, good to see you. What's up, man? Please unmute yourself.
Doing well, George. Thank you as always for these spaces. Brad, great to hear your analysis. Been following you for a couple of years now. I just have one quick comment. Long story short, my parents are currently in the market for a new vehicle in Canada, and that we were talking about the market price adjustment that the dealerships are putting on. That is still the case. It's about 50-50 right now. It's rare to see a dealer listing a car for under MSRP. So I imagine Tesla will get hit hard because they were pocketing all of that. My question, I guess, Brad or George, if you guys can speak to it, is how do, and I think it's been touched on before, how they spread out their costs, but how do we have COGS dropping as a result of 2 new factories being opened up? If they're producing more units, wouldn't they adjust the cost of the 2 new giga whatevers into the COGS?
Actually, the COGS per unit they're not dropping, and they shouldn't be. I mean, when you build a factory, forget about 2 new factories in the most expensive places in the world. You have massive startup costs, and you've got massive fixed costs that need to be depreciated. Now, Tesla has not shown those costs yet because they go instead of straight line or declining depreciation, they go on a unit volume basis of depreciation, which is the most lax accounting I've ever seen in my life. And so I was expecting to see COGS per unit, going up big time, and it didn't. But despite the lax accounting, just to answer your question very quickly, the more they ramp up their Austin and Grunheide factories, you're going to see COGS per unit increase. So this is the point. They have not declined this year. First quarter, they were flat. Second quarter, because of the Shanghai lockdown, they were up like 6%. Last quarter, Q3, they were up like 1.5% or something like that. But COGS per unit have not declined.
Gotcha. Thank you for clarifying. And just, last point before I turn over the mic to someone else. I think all of us in this room understand that Tesla is just a piggy bank for Elno to finance the rest of his fever dreams, but I'm sure someone else will be able to put it more eloquently.
I think, George, you're better at this than me.
Yeah, one question I wonder. I like you, Motorhead. I've never seen a company with such aggressive accounting, auto company with such aggressive accounting, and gets away with it. And you take that. You said the funding secured, the 420 thing. His quote where he said, "I don't respect the SEC," and he tweets and yada yada yada. I mean, it's sort of like he's living under a completely different set of rules, and he gets away with it. And it just makes me wonder. I was having this discussion with somebody today, and they're like, "No, he's protected." I mean, think about it. I mean, he is working for the U.S. I mean, he puts rockets up in the air. He's working for the freaking U.S. government. I mean, he gets away with so much stuff. It really starts to make me wonder, like, is it just sheer incompetence and benign neglect, or is there something bigger going on here where he just gets to pull stunts that you and I would never dream of? So I don't know. That's just sheer trash talking on my part. Okay, who's up next? Is it Average Joe? Is it Average Joe and then Marion? Average Joe, good to see you. What's up, man?
Hey, brother. Hey, thanks. Hey, Motorhead, it seems like you lived my life. My family's been in the auto industry since the 60s. You talk about every 5 years going through, we can't afford this. And guess what? I might be getting laid off for the last, 40 plus years, 50 years. And I've been in the industry for 29 and a half years. I've always been puzzled. I mean, Tesla did a amazing thing. They built the first electric car that Americans could, use. And, we didn't move fast enough in the big 3. Basically we were waiting for the government to push us into that industry. And I've always wondered, they did computer animated engineering for most of their engineering, and it's catching up to them. The big 3 and Toyota, we still don't rely on that computer animated engineering for durability testing and for impact testing. Some of the most critical things that you have said, and that's when it's going to be warranty cost. And I would like to ask you, how much have they increased their engineering costs to change their product? It takes millions of dollars. I mean, yes, they have only 4 different types of products, but you know it costs us a big three. I mean, billions of dollars to build that cost in, from wind tunnel testing to just having the hardware and license to do this kind of testing, and and having our proving grounds as well. So I'm glad that you're bringing that up about because we've always been very outspoken about real life cycle testing in the big three, and consumers don't know about that as well. I think the big three and others that have been in the industry for the last 50 years are positioned better than Tesla to overcome a recession at this time. And I say Tesla's never been in a recession, but I say that we have hybrids coming out, like you have stated, that, and we have diesel and we have gas engines, combustion engines, to take us through this. Where consumers will still, and if they change the laws, to 2030 or whatever for implementing the electric vehicles, we will have our, as far as the consumer that's loyal to our brands, we have that built in. And I think, most of us can agree that Americans will buy American products. And also the companies that need those products.
Right. So Joe, let me ask you, is there a particular question you'd like to put to Motorhead?
Yes, I just want to say, what it's going to take for Toyota to survive, basically. I mean, or I'm sorry, not Toyota, but Tesla to survive and against the big three.
Well, you've got a very good question. And my theory is simply just looking at the lithium supply. And I took Goldman Sachs, J.P. Morgan, and Morgan Stanley. They put out like a huge thing about EV supply chain materials and things like that. And I'll post this later on tonight. But the thing is that we're running out of lithium. There's not enough. And what's going to happen is that, like I said, previously, is that lithium will go up so much that the price of an EV will become like a Ferrari. So people who drive EVs will be like, looked at like, wow, you're really rich, because you can afford an EV. So I don't think that EVs will make it. I think actually mining lithium and mining everything, when you build battery cells for an EV, you emit more carbons than you do when you're making a gasoline engine vehicle. So it's like, and I don't think anybody's done the work yet. They've done the work on a Honda Civic versus a Model 3, and they came out with the statistic that you have to drive the Model 3, I think it's something like 50 to 70,000 miles before it breaks even on a carbon basis, from well to wheel, meaning from mining all the materials and getting all the materials for the car. So my theory is that that Toyota Motors is actually the smartest car maker out there. They're saying, we're not going to jump on the bandwagon. Volkswagen is a piece of shit. I mean, they've got horrible governance. They've completely scammed the entire world with their diesel shit. And now they oh, okay, we're going to jump on EVs, so Volkswagen, I would short Volkswagen along with Tesla, because they've jumped on the whole EV bandwagon. And I don't think EVs will be the ultimate solution. I think it's going to come down to plug-in hybrids, because the average American drives 14,000 miles a year, and the average plug-in hybrid can get you around town about 50 miles a day. And so most of the people I know who drive plug-in hybrids, they go to the gas station every 6 to 8 weeks. So I mean, it's like, why not move to plug-in hybrids? This whole EV shit is bullshit.
That's a great point. A great point, Joe. Joe, great answer, Motor. I want to move ahead because we got a lot of good people that want to get up on stage. I want to go to Marion, who has, I think, some interesting observations about what's going on in Europe with electricity prices. So, Marion, please unmute yourself, and then we're going to do Montana, and then we're going to do Howard. So, Marion, the floor is yours. Please unmute yourself.
Hi, George. Thank you. First of all, great space. Yeah, I just have a thought about, I live in the UK, and my electricity bill is up 3x, which is not that bad compared to other European countries. So I know that when the diesel cost goes up compared to petrol, people sell diesel and buy petrol cars. But when you have 3x increase, and that's thanks to government intervention, does anyone know how is that going to impact the demand for electric cars in general, not just for Tesla? Thank you.
Motorhead, do you want to have a go at that? I mean, obviously, one of the, I know it's one of the tricks that Tesla plays is when they try to convince you how much cheaper it is to drive an electric car, they show you I remember it was a few years ago, they would show you life of car, cost of savings on not having to buy gasoline, plug in electricity price instead. But now, as Marion's pointing out, electricity prices have skyrocketed. Doesn't it turn that mathematics on its head, Motorhead?
Yeah, no, I mean, but by the way, I mean, you're lucky if you're in the UK. I had a guy from Germany DM me and said that to charge his Tesla is going up 70% from January. So it's cheaper to plug, to get a nice vehicle. So that's the answer to your question.
What could possibly go wrong? Hey, good question, Marianne. Appreciate it. All right, let's go to Montana and then Howard. Montana, please unmute yourself.
Hi, George. Thanks for having me on. This is just anecdotal, but I've spoken to 5 different people in the last 2 weeks who are looking to get rid of their Teslas. And my question is for Motorhead. Can you envision a scenario where sales actually decline next year?
No, I don't. Okay, so I mean, these guys are all about the stock price, right? So, what drives the stock price, what has driven the stock price up to now is deliveries, and deliveries have nonstop grown by 30 to 50% year on year, and so I don't expect deliveries to decline next year, but I expect pricing to come down big time. I mean, at least 15%, mind you. Since the pandemic started and we had the chip shortage and all that stuff, which led to a decline in new vehicle inventory, you've got Tesla's prices going up by 27%. And because they have a direct sales method and they don't have dealerships, that all went into their pocket 100%. And so I don't expect deliveries to decline. And even Musk said this. I mean, Musk said this last week on a Twitter space. I couldn't believe it. He said that 2023 could be a 2009 type recession. And I mean, I don't know how many of you guys were around in 2009, but I was working in a hedge fund, and it was like it was I mean, it was seriously bad shit. And the point is that if you have a recession, and people say, oh, well, Tesla has, high gross margins, so, they can lower prices. Well, listen to this. In 2009, 2010, BMW, Mercedes-Benz, and Lexus combined saw their sales unit volumes decline by 30%. Okay. So, yes, they could see volumes decline. They should see volumes decline. I mean, nothing goes up in straight line. But the thing is, what Musk said on a Twitter space last week was that they would lower prices so that they could grow volumes. And he said that we could be in a situation where we have lower margins to negative margins. And I don't know why this was not bigger news last week.
Yeah, I was on that space, and my hair caught on fire when I heard that. And I'd like to point out something else to the questioner, and that is, this model of selling dollar bills for 80 cents and raising capital from the markets to plug the hole in pursuit of growth at any price and being rewarded by the market because they're just paying for top line growth. In a world of free money, where you can plug up your you can patch the hole, you can plug the hole of losses with free capital. That works. But Dorothy, we're not in Kansas anymore, and the market, you're starting to see this. The market is not paying for that anymore. Growth at any price as an objective is well past it is beyond its past due date. And so, whether it's that or it's stock-based compensation, all this kind of stuff. I mean, companies, company managements, follow the market. It's like, Charlie Munger would always say, you show me the incentives, I'll show you the outcome. And so, even if they pursue this, and I'm willing to bet, as Motorhead was pointing out, Musk probably still thinks he can run the same playbook. I will tell you, I think there's a very strong chance, you're starting to see it, the market will not pay for it. The market will not pay for it. This growth at any price was a complete aberration, born out of the most irresponsible monetary regime in recorded history. And so it is game over for that. And companies, and just as a general proposition, they're getting away from Tesla. You got to focus on companies that have good balance sheets, strong cash flows, that do not depend on external financing. Kathy Wood, please call your office. So I think that's just wildly off the mark. So it's a great question and a great answer from Motorhead. I'd like to now go over to Howard. Howard, good to see you. You're from God knows where. What's going on, my friend? Where are you?
Thank you, George. In Tonga, where your space 2 days ago, as you were going through this day in history, actually shook the world over here. You were talking about Banda Aceh and the tragedy there in 2004, and we literally had an earthquake while you were doing that. The building started shaking, 5.5 offshore. So thanks for not shaking the world today. But Brad, great to hear you do these two spaces, this one and on Saturday. And I have just a quick question about oil in the Teslas, and it loops back to the embodied energy quotient that you were talking about a while ago, and Arjun's question about climate neutrality and so forth. But Dr. Anas Al-Haji has mentioned that it takes about 60 barrels of oil to make the plastics in a Tesla. And I'm wondering if we have an all-in figure on how much oil it takes to make any one of the four models or the average model, because it seems like that's a wildly variable input, much like lithium. But in the case of oil, obviously it will go up and down, where lithium seems like it's just going straight up. And I haven't seen a figure on total car and what it really takes in terms of oil to build them.
Yeah, Howard, let me jump in on that one. So Howard, I haven't seen that either, but I think the figure that really impresses me, Motorhead recited it a few minutes ago, and that is, if you do a full carbon audit of an electric vehicle, and correct me on this, Motorhead, I think it's like 60,000 miles is kind of like the break even. So the carbon savings is just marginal. Obviously, the cost of the oil to make the plastic is one component of that. But if on a holistic basis, it's not even clear that we're doing anything to reduce carbon footprint. I mean, Motorhead, do you want to elaborate on that? Maybe you've seen the figure.
Yeah, it's funny. I was like, so Toyota's like in the doghouse this year, and I just talked to them on Monday, and I said, so the big thing with Toyota this year is that they're basically taking they're taking the hit for commodity prices on behalf of the suppliers. Okay. And so I said, can you break that down for me? And so they're taking like $126 billion hit. That's massive, for a car maker. And so they said, yeah, it's mainly steel, and then there's aluminum, and there's rare earths. And they said rare earth materials have come down a lot, so we're okay on that front. but they said that steel is still really high, and so is aluminum. But they said that, and they're the only car maker that said this, but they said that resin products, which goes into what you're saying, is the components of a car that are linked to oil are still very high right now. So so a car maker like Toyota is still seeing, a portion of the 125 billion, 126 billion dollar headwind from commodity costs coming from resins.
That's just a huge number. Howard, you have a follow up on that, Howard?
Yeah, real quick. Yeah, I've seen the 50 to 70,000 mile figure, and so it takes several years in North America to offset that. We have seen, I don't know what the average is now, but cars are going a good couple 100,000 miles now. I don't know about these electrics with having to replace battery packs and so forth, but we might be doing some good, but it seems like it takes an average driver 3, 4, 5 years to reach that threshold.
Sorry, I just want to say this to everybody, and I'm sorry, George, to jump in here with you without you moderating it first, but I think the Biden IRA EV subsidy program is the stupidest program in the world. It's exclusionary. I mean, look, Tesla has been able to sell all their EVs in Europe without any kind of like tariffs, right? But this Biden bill for EVs in America is so exclusionary that I mean, you've got every single company, every single country in the G7 lining up saying this is bullshit. I mean, you have to make to get the subsidies of $7,500 in America. You have to source basically 50% of the materials in America, and that's impossible because you can't get some of the materials in America because the mines don't exist for lithium, etc. So anyway, I just think this IRA thing by Biden is like the most ridiculous clown asshat show in the world.
All right. So I just want to reset the room here for 1 second. We've got Motorhead here, who is, my God, such a wealth of information. When you talk about getting down and dirty with the numbers, I don't think there's anyone better than Motorhead at dissecting Tesla. And Motorhead, how long have you been following the auto industry now? How many decades?
I'm embarrassed, but it's like 27 years now.
How long have you been over in Japan?
27 years.
Okay, so there you go. And one of the cool things I remember from years past in Motorhead, maybe just weigh in on this. Like a lot of times, what the Japanese companies will tell you, you get like some pretty interesting information sometimes, a different perspective. They'll tell you things that American companies won't tell you. So, do you find it refreshing to be able to speak to the Japanese companies?
Yeah. So the great thing about Japanese car, first of all, the thing I love about Japanese companies, and I mean, I didn't only I didn't only cover automakers, but I have covered that sector longer than the other sectors. But the point is, you don't get people coming out in Japan and pumping themselves the way they do in the States, right? So it's like you listen to a GM, earnings call, and they're compared to Tesla, they're quite reserved, but they still pump. But the Japanese companies, they'll come out and they'll tell you things are not good. Things are not good right now. And I mean, so this is what I love about Japan is like, they don't pump, and they'll come out and they'll tell you, they'll say that, things are really bad right now. And when things are really good, they'll say, well, it's not, because we were good, it's because the market's good and stuff like that. So yeah, it's very refreshing to talk to Japanese car makers because they'll tell you what's good and they'll tell you what's bad.
That's terrific. And so, and just I have to just as has become resumed the custom recently, remind everyone that these are just unbelievable spaces. They got the quality of speakers like Motorhead in here. We had Arjun in a few weeks ago talking about energy. I mean, it's just room after room after room, and it's just unbelievable. And so, if you find these rooms valuable and useful in your investments, As you're aware, I've been stumping for World Central Kitchen. We do these for free. We just try to share information, help each other. And there are people out there who are in a world of hurt who really could use our help. These are first world problems we're dealing with, trying to preserve and increase our net worth. So I'd ask everyone, especially as we're coming down to the end of the year here, we were incredibly successful earlier in the year. We raised, I think, $220,000 the first few months of the year. We gave it a rest for a few months. We started 2 weeks ago again, and I think we were through $250,000 last I looked. I'd like to really get us to $300,000 before the end of the year. It's not really a big ask when you think about how much money we're all investing, and everyone gives according to their means, and the $10 gifts mean as much to me as the $10,000 gifts. And so I really, someone like Motorhead or Arjun or any of those that we had, I mean, these people, these are heavy hitters and command large amounts for their services, and they do it for free because they like to teach and they want to share. I think they enjoy it. And so I'd ask you to please, please, please pay it forward and give to World Central Kitchen. I will put the link up in the nest. We have our own page, and as I said, we're through 250,000 on our way to 300. Nobody else on Twitter has done this, and I'm really proud of you guys. And I'm asking you to please dig down and share the generosity, share the love with the folks at World Central Kitchen and what's going on in the Ukraine. They really, really could use our help. Okay, with that, let's move on. By the way, we've been going at this for an hour and 45 minutes. I'm going to say provisionally I want to close this room at 10:30 Eastern, so 42 minutes from now, because I got to have a life. So I'm going to ask each of the speakers or anyone who comes up on stage to try to keep the questions tight. So we're going to go to Ben and then Michael. Ben, please unmute yourself.
Hey, George. I interact a decent amount with Motorhead. I don't have a question, but I have a statement more or less that I feel just wasn't brought up tonight and is not brought up nearly enough, which is the idea of key man risk. Just kind of, if let's say that Elon Musk gets hit by a bus or a runaway Tesla or overdoses tonight, what does Tesla stock trade at tomorrow? And in my humble opinion, this is something that is not analyzed or thought about nearly enough by anyone who's holding this stock. It's obviously a cult stock. It's propped up on the cult of personality of Elon Musk, Electric Jesus. So again, ask yourself that question. If Elon Musk does not wake up tomorrow, what does the stock trade at? And I would wager that it's a far outsized key man risk compared to anything else in the tech sector, cyclicals, whatever have you.
Motorhead, you want to have a go at that? Because I have an opinion.
I've got an opinion. The fanboys would cry. I think the stock would rally. If you get somebody like, I saw Nissan go bankrupt, and then Carlos Ghosn from Renault came in and turned the entire company around. You get a high-flying CEO like that turning around Tesla, the stock could actually rally. And I think people have had enough shit with Elon, praising, Russian oligarchs and stuff like that. It's like, I think the stock might rally, actually. I mean, I agree it would go down for one day, but I think ultimately getting rid of that asshat, it would be a plus for the stock.
So my answer is a little bit different. It's a multiple time frame answer. I totally respect and sympathize with Motorhead's view that it might rally. I think looking beyond that, though, I think it will collapse. And the reason I say that is most stocks, you have a company to sell a product, and the stock price is a function of the revenues and profits generated from selling that product. Tesla, it's completely backwards. Tesla, the product is the stock. And you want to talk about price discovery and value will out. I think the fundamental value, the true earnings power of the company is so small relative to the current market cap of the company, and the bubble-like valuation multiple of earnings or revenues is a function of Elon Musk, that whereas the company may do better operationally, I think valuation-wise, I think it would collapse. So I don't know. That's just my 2 cents. Ben, do you have a follow-up?
Yeah, I was honestly kind of stunned by Motorhead's reply to that. Maybe there's some sort of embedded bias there, which is totally fair. You know, Motorhead and I'm sure we have a lot of battle scars from trying to short this fucking thing forever. But yeah, you get me. So the thing is too is that if Elon is gone, then I would expect basically an announcement of financial restatements within a quarter. Because if you look at, and this is something this isn't even new, but I bring it up to a lot of people. Chanos, McKenna, people way smarter than me have brought this up before. Their net income on their cash balance just doesn't tie out. It doesn't. They don't earn shit on their alleged giant cash pile, and that is something that also should alarm you, whether it's because they can't repatriate cash from China or whatever it is. They're not earning anything on their cash balance versus peers. And
Right.
again, I'm not the first person to bring this up. We noticed it back around 2018, but it's a real issue. So if Elon is gone and you lose the Steve Jobs of your company, the next thing that would happen, in my opinion, is basically people are going to flee, and you're going to see massive, like, okay, we're going to have to restate a lot of financials. One of my favorite Tesla stories that a lot of people aren't aware of is they had a CAO come on from Seagate a few years back. He was there at that company. On paper, he was there for about 3 months. But an unpublished story that just didn't make it to press because they couldn't get a double source on it was that he was shopping a CAO that they had just hired, a chief accounting officer, was shopping his resume after being at this company for 2 weeks.
Yeah. Well, Ben, this was all in service to the point I made. The product is a stock. And so when I talk about value out, like if you properly, part of that is just getting to the bottom. Like, what do they really make? I mean, for instance, one of the things I like to point out, you look at, how they define cash flow, how they define earnings. You look at the cash conversion. I mean, it's clear they're playing games. And so, no, 100% agree, Ben. Ben, it's an excellent point. Thank you for that. Again, I don't want to be abrupt, but I do want to move quickly through the room because I do want to close this room at 10:30. So let's go to Michael and then Ryan. Michael, hello, my friend. What's up? Michael, please unmute yourself.
I love this. I love this space, George. Thank you so much for this. It's just unbelievable information flow, and I think that I hate to say this, and I'm gonna wear my flame retardant suit here, but I think we've got a bearish echo chamber tonight with this stock. Do I think that Tesla's going to 30 or 0, or ARK is going probably to go to 0? But you got an RSI of 16. You've got guys on the internet saying that, and respectable guys with huge followings saying it's almost as if a short Tesla is a guaranteed money printer. And you've got Musk, who's probably has his gamma squeeze mafiosa, admitting he's a clown. It suggests that there's going to be a tremendous bounce here. And I think I think you got to be very careful here, and that's all.
Yeah, so Michael, I agree with a lot of your points, and trust me, I mean, everyone can see what I'm doing in the NOPE ETF. It's
I love Nope.
my second big.
It's awesome.
It's my second biggest position, so I wonder about it every day. But the way I kind of look at it, I'm reminded of the great line from Walter Deemer. It's not when everyone turns bearish that's important. It's when they're done selling.
Right.
And I think, and I don't know if this is right or not, but I mean, Motor, maybe you have a perspective on this, or maybe Michael, you do. But there was this article floating around. I can't believe this article. It just seems crazy. I can't believe it. It says something like the average retail investor had like 10 or 11% of his portfolio on Tesla. Now, whether that's exactly right or not, I don't. That's not important. Okay, what's important is if you look like it, like look at Fidelity's website, discount brokerage or whatever. I mean, Tesla continues to be one of the most widely held, widely traded stocks. All right. The public is still in love with this thing. We are just in the awakening phase. I mentioned earlier about Soros's, variant perception and trying to figure out when the market is going to ascertain that it's been had. I think we're there right now. But again, it's not when people turn bearish it's important.
It's when
It's
they
when they're
sell.
done selling.
Right.
And I think they're just waking up. And so right here, right now, it's a momentum stock. So all the momentum idiots are piling out. You got tax loss selling. You got my general bearish narrative in the market the last few weeks has been that if the market were to give it up, no one's going to stand up and take risk here to defend XYZ piece of garbage right now. And Tesla falls under that category. So listen, both can be true. I torture myself with exactly what Michael, think about this for a second, right? On the one hand, I channel my inner Michael, right? And I'm like, oh, I should cover this thing. The other side of me is like, dude, this is exactly what you've been waiting for. The jig is up. The thing's gone X growth, blah, 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 blah. And now you're going to cover the goddamn thing because like Motorhead or Ben, we've got tire tracks all over us for having shorted this thing for the last umpteen years. No! Now's the time you should be attacking. And so on even numbered days, I think the former, and odd numbered days, I think the latter. And with respect, my friend, I got all the time in the world for you. I would humbly suggest, this may be an echo chamber, but it's a very small echo chamber. This is not representative of the market writ large. And so what you say is
That's a good
true.
point. Great
And
point.
it's the old, I can't remember it was Einstein who said it, but the ability to hold two conflicting viewpoints in your head at the same time and not have your head explode, okay? They both can be true. And listen, I'm terrified of what you say, but the flip side of it is, I get in violent arguments with myself. You have no idea, all right? I had that argument with myself a week ago when it was 170.
Right.
Now 109. Listen, what kind of a schmuck? Listen, what's worse? It's now you finally got your wildest wet dream coming true on this thing, right?
And you bail.
Okay, and you bail. How would you like to have bailed at
Yeah.
170 and then in the blink
So
of an eye
true.
it's 109? So like on the view that you're going to make a mistake, and which one can you forgive yourself? Like it's pay dirt time. Like I'm willing to go to distance with this sucker, as opposed to, I mean, after all this struggle, if I covered the whole thing at 170 and it's 109, I think I'd be jumping off the top of a building. So
No,
I hear
there's zero
you.
fundamentals on it.
Yeah,
At
the end, and people come after me. It's like, oh, who is this guy? You know what you own? Peter Lynch. He's a fraud. No, I know exactly what I own, or in this case, I know exactly what I don't own. I know exactly what I haven't, what I've sold short. The problem is, it's the people that own Tesla. They don't know what they own. Listen, this room tonight has been a master class in Tesla nerddom, courtesy of Motorhead. There has never, ever, ever, ever been a room like this on Tesla. You get all these fanboys. Oh, Elon says this, and the RSI is that, and it's cool, and it's green, and it's this, and it's that. It's all bullshit. It's all smoke and mirrors. I was brought up at Fidelity, taught to do fundamental work, blocking and tackling. Okay, I give you Motorhead. Okay, those bozos. I won't use a stronger term, like what's his name, Ross Gerber. Or Kathy Wood or Gary Black. They do
It's
no
Goober, actually.
fundamental work. That jackass, and I'm going to call him a jackass, value analyst, if anyone knows him, get him in here right now. That prick, he runs those rooms trying to lead the lemmings off the cliff every other day. Why Tesla's going to triple this year, okay? I went into a room a month ago. In a very nice, quiet way, in Columbo-like fashion, I started asking leading questions. And it was clear that he didn't know what the fuck he was talking about. Well, we're gonna have to do that. We're gonna have to take that swear word out of here. Try not to swear. And I said, "How do you get to this?" And Motorhead, let me know when you're gonna stop laughing. The guy had the gross margins of the company going from 27% to 45% in 2 years because the whole self-driving thing is gonna work. I mean, these people, they're charlatans, they're quacks. It's not that I disagree with them. I don't respect them. They are full of shit. There's no way they would ever get a job at any respectable firm. And this is the state of fintwit. And when you get a guy in here like Motorhead who knows the stuff. Basket swaying, game delaying, offensive fouling, crash on them, dunk on them. It's not that I disagree with them. I don't respect them. They're frauds. That value analyst guy is a fraud. Kathy Wood is a fraud. Ross Gerber is a fraud. These are cheerleaders. These are not analysts. And I rest. Hope that answers your question. Ryan, the floor is over to you. Ryan, the floor is yours.
Thanks, George. Fantastic room again. I got a question for Motormouth, and I am way outside of my here, so bear with me. But there is a nickel mine that's being contested in northern, supposed to go into production.
Hey, Ryan. You sound like a smart guy. You probably know your shit, but I don't. Is this really like relevant, or is this like sort of rabbit hole minutia stuff? Because
irrelevant. So it's kind of a read because they're supposedly Tesla is committed to purchase 165 million pounds of nickel from them. So I'd love to get Motorhead's read on what, can you read into that? What does that say that a mine that's supposed to start producing in 2026 is committing 165 million pounds of nickel to?
Most car makers do not disclose how much materials they've locked into, so I have no idea.
All right. Hey, Ryan, you know what? I suggest you take that question up offline with Motorhead because I think it kind of runs a little bit wide of what we want to talk about in this room. Good question, just not for this room. Ben, did you have a follow-up? I see you keep raising your hand, Ben.
No, that was actually that was pretty much it.
All right, that's cool. All right. So I want to try and knock off the rest of these. I'm going to get everybody up here, and I'm going to try and close this room because this has been really going. This has been a great room. All right, so let's go. We're going to go back to Globro for a follow-up, and then we're going to do future, and then my good life. So Globro, you had a follow-up?
I just wanted to make a quick little point. We were talking earlier about emissions. One thing people don't factor in, not only do the ranges of when do you offset the EV carbon footprint vary from 10,000 miles to 120,000 miles, most people don't realize that steel, copper, lithium, all of these things require not only oil and gas, but coal-fired plants at all the mines. So I don't think we can ever make up the front loading of carbon footprint.
Yeah, that sounds right. That ties in what we were talking about earlier about how if you do a full proper carbon audit of these things, they don't really save much on emissions. Thanks for that, Globro. All right, let's go to Future Investor, and then we're going to go to My Good Life. Future Investor, please unmute yourself.
Yeah, hey, George. Yeah, nice to speak with you, and thanks for bringing me up. Just had a quick question. Given your experience at Fidelity and looking through the 13Fs and the recent filings, I was just wondering if you could provide some commentary on the types of discussions that are going on at, T. Rowe, Capital World. These are obviously, huge institutions, a lot of capital. They're not ARK, not Kathy Wood. They don't have the same axe to grind. So, given that they've been adding to the shares, I'm just wondering if you could, provide any color or insight on what you think they may be doing. And just to add to that, the price action in Tesla over the last 2 weeks feels very reminiscent to me of the short squeeze that the stock went through in February 2020. A lot of volume and up. This feels exactly the opposite. So I'm pretty sure the squeeze was driven by big institutions. What do you think about now?
So not in any particular order, and I'll take a stab at it first, and then if Motorhead or Ben or anybody else wants to take a shot at it. Actually, you know what? Let me go to Ben. Ben, you seem to be animated about this question. Ben, do you have a perspective?
Oh, yes, I do. And this was a quote conspiracy theory for a while when the stock was just full disclosure, I was long while this was going on. But when we were getting these crazy gap ups and +5, +10, +15% every day in Tesla, and you saw these wildly outsized call buying volumes on the stock, and then later we found out that was fucking Masa-san from SoftBank. It came out. It's a proven thing now. Masa-san was buying tons and tons of OTM options on a lot of his holdings to drive up the price, because that creates delta hedging. So it buying begets buying, whether it's through options or stock, and that will unwind. And that, I think that's been a huge part of what we've seen recently, because again, this stock has more open interest in the options chain than anything else in the entire market, period. So you have to keep that, because especially at this day and age, if Ben Eifert was here, he'd back me up on it. But at this current state or market condition, options do drive markets. That's a reality. The dealers have to hedge their positions that they're selling. And now with the stock price collapsing, all these people who had a delta hedge against these deep out of the money options that are now way underwater, where the IV has been very much suppressed on them, they get to roll off those delta hedges of the common stock that they were owning to hedge against that. So it just creates that positive feedback loop that goes lower and lower. That is just a reality. Like just talk to a guy who runs like a vol desk, and he'll tell you like that's a thing. So like, yeah, and again, it's a very levered name, because this is this is a Tiger Cub favorite. It's a name that levered funds love to be in, because it's just up and to the right. But when that breaks, you have to get and flush all of that leverage out of the name.
I would add, Ben, that's totally spot on. I would add to this that Capital is the largest holder of Tesla among actively managed funds. Okay,
CWI.
So I'm not talking about BlackRock or Vanguard, but
Right.
Capital is like the largest holder, and
Yes.
they're based in Los Angeles, and you got Musk sitting there, and propping up not and going against LGBTQs, and saying that Medvedev had a great fucking thread last night. I mean, I would not doubt that when we get the next 13F, that that Capital has sold a lot of Tesla.
Yeah, and then you add to that, you got Mr. Musk, who's now sold, was it 40 billion in equity this year or something like that. So the float has been getting bigger. I don't know what some of the Mo guys like Baggy Gifford have been doing. But that's pure momentum investing, cash flow investing 101. And when the movie runs in reverse, we know how that works. And then I want to put the cat amongst the pigeons. I raised this before the other day, and I'm going to repeat it. And Ben, maybe this will trigger you. But you go back to 2000, and you look at the meteoric rise of ARK. And basically, and I'm not saying it's cause and effect, but it's symptomatic, maybe just the changing tide of liquidity. But more or less from around the time Bill Huang blew up, that's kind of when Cathie Wood top ticked. And I don't know for a fact what happened, but, I'm a street smart Jewish kid from New Jersey. My bullshit detector's pretty good. And if you just go back and look, whereby it's well known, it's documented, they freely admit to it. Huang and Wood were tight. They met each other through a church, and it's just something tells me their discussion wasn't just limited to the weekly Bible portion when they would meet. You then consider that Bill Huang seeded ARK investment, and if I were to be nice about it and not be too conspiratorial, at a minimum, I would say that Huang was using Cathie Wood as a useful idiot, and just looking at her flows and what she was buying. And the world had really never seen a gamma squeeze. At least I didn't know the gamma squeeze was a thing until this Tesla thing started. And it takes a special type of sicko, Bill Huang, please call your office, to come up with such a scheme. And so at a minimum, I would say that Huang was anticipating and trading off of Cathie Wood's flow. You could take it one step further and say that, it was totally conspiratorial. But I think it would be a useful exercise, a good use of time, if Gary Gensler and the good officers of the SEC would sort of take Huang's trading records out and Wood's trading records out and put them side by side and just see if there happen to be some patterns that are of note. I will also repeat the story that I mentioned the other day, and that is a good friend of mine in turn was having a conversation with someone he knew very well that used to work at Credit Suisse. And this was like, I don't know, it was earlier this year. And he asked this guy, well, gee, why is it that whenever there's a car crash, you guys are always left holding the bag? Like, how could you have extended Huang so much credit and been so stupid? Last one out's a rotten egg. Morgan Stanley, Goldman panicked first. And the answer was, well, we weren't as dumb as you think. Why? Well, the reason they extended him all the credit was apparently Huang had the golden touch. Whenever he'd buy something, it would soon be followed up by numerous sizable orders from other Asian accounts. So the guy couldn't miss. So I think, I don't know, but I'm surmising, and I would like to I would hope the SEC would be curious enough to look into it, but I don't trust. I don't risk. I don't. I mean, the regulatory authorities they're just outrageous. They don't enforce the laws. But the idea that Huang was working in concert with other accounts, Asian offshore accounts, maybe Chinese accounts, and in turn with Cathie Wood, and in turn with Musk's offshore account. Some of that might be true. I don't know. But it's the question that hasn't been asked. So, Ben, I want to turn to you because you're a glass half empty, sicko kind of a guy like me. What part of that could you envision being partly true, mostly true? I mean, how fertile is your imagination, Ben?
Oh, so on that specific kind of note, I think of things as conspiratorial speculation, and reasonable speculation. And for me, because again, as I was dying to bring this up. You already did, but I was dying to bring up that Bill Huang and Cathie Wood are great friends. Again, like as you brought up, that guy seeded her fund, so there's obviously a connection there. And those two, I doubt, are mincing words in between Bible study. I mean, and that's already a concern I have in general with Cathie Wood. If I have nothing against whatever God you want to pray to, that's fine. But Cathie Wood has said that she talks to God about her investments, which is already to me all kinds of red flags. But that falls in my, again, like I'd like to think of myself as like a cynical realist. It falls under reasonable speculation in my book. When you look at the associations, I don't think it's that crazy. Because again, like you look at the top tick of Cathie Wood, and when Huang blew up, when he finally got caught out on his where he was pulling leverage from these different places that he wasn't being honest with. So he was more or less double dipping in like leverage pools. He locked the float on GSX. If anybody here is traumatized enough to remember that, I don't need to tell you that. But yeah, it's that to me falls underneath like the reasonable speculation bucket. Plain and simple. It's just not a far stretch. When you look at the history between those two, it's not crazy to think that.
It's certainly now is not crazy to think that. I think from where I come from, the regulators are not doing their job, and they'd be remiss if they didn't look into it. So, I mean, I just think it's
well, and that was the one last thing I was going to say too. And somebody told me I need to like put this on a shirt. The SEC does autopsies, not physicals.
100%. Thanks for your perspective, Ben. All right, let's go to My Good Life, and then we're going to go to CKG. My Good Life, please unmute yourself.
Hi, how are you doing tonight?
All good. Glad you're here. What's your question?
My question is, I have a little bit of a different angle and different perspective. And my background, I worked in solar for many years for First Solar, the largest U.S. manufacturer of solar. And recent experience, and I actually live in Arizona, so it's obviously a very sunny state. But I'm installing solar on my home, and the rate at which I'm able to procure solar and produce enough electricity for my home, but also an electric vehicle, it essentially works out to about $50 or a little bit more a month to basically power my home and power an electric vehicle. And this is, a cash price. But how do you think about that and be bearish on electric vehicles at the same time? I mean, I'm literally, and this is before any net metering in Arizona.
All right. So, all right,
Um,
Ben, we got the question. We got the question, my good life. Ben, over to you.
So my response to that would be, do you know what the percentage of Americans are who live in an apartment?
I do not know.
It's a lot. And granted, a lot of these apartment complex / multifamilies have charging stuff that they're starting to build in, but for the most part, if you're looking at an actual like linear extrapolation to people who can charge their vehicles at home, it's a very low percentage of the overall population.
Yeah, and I guess the last thing I'd say, just my good life, is the story may be right. I'm not even sure that it is that you're telling, but let's say the story is right. But as my good friend Joel Tillinghast, who recently retired from Fidelity, the price is wrong. I mean, at a $350 billion market cap, it's in the price many, 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 many times over. So
yeah, it's about 40% of the American population that lives in basically living structures that would not have access to EV charging readily.
All right. Let's try and knock off the last couple speakers. Let's go to CKG. Please keep it brief, and then JR. CKG, please unmute yourself.
How's it going? Thanks for having this space. Thanks for bringing me up. Couple statements, couple questions. One, Kathy's going to need a bigger boat. I think we all know also the SEC stands for suck Elon's you know what. So first question, um, when will the master of coin and the techno king start selling off their Bitcoin? I understand they have about, I believe, 19 billion in cash.
Sorry, are you talking about Tesla selling their Bitcoins?
Yeah, when
No,
when
no, I'm sorry. It's an irrelevant
okay,
question.
second question then.
Hold on.
Go ahead.
Amount of Bitcoins they own. They sold some of it. I don't even know how much they own anymore. It was tiny. It was like $1 billion, $2 billion, whatever it was, compared to a company which even now has a market capital of $350 billion. So whether the price of Bitcoin goes to zero or doubles from here, it doesn't move the needle on Tesla. So that's why I don't want to be harsh. It's just I'm tired, and this room's going on for almost 2.5 hours. It's just not a relevant question. What's your next question, please?
Sure. The next question is, how big of a distraction um, are the Tesla robots for Tesla? My understanding is they don't spend as much as other car
Yeah,
companies on R&D.
again, you know what? I'm just going to Motorhead quickly to answer that, but I don't think it's terribly relevant to the. Listen, it's an interesting question. It's just not relevant to what we're trying to figure out here tonight, which is whether or not Tesla's going to go down 80% next year. Motorhead, do you want to say anything about Tesla's use of robots? Is there anything noteworthy or anything special?
Yeah, I mean, they're a car maker, right? So, I mean, that's all that needs to be said.
Thanks for that, Motorhead. All right, I'm going to go to JR. I'm going to give him the last
Hey,
question.
yeah, I appreciate the
JR.
floor, guys. Yeah, so George, I worked for S&P, sold a Noble for a long time. I don't work for S&P anymore. My question is I think people don't don't realize how big this thing is. It's not a gamma squeeze. This thing is in the index. It gets stuffed into retirement target date funds, and it's that big. So my theory has been, working at S&P for 10 years, I do think I know how archaic that organization is and how they operate. My hypothesis for the last 2 years, and I've been wrong, has been that this thing is going to get pulled out of the index, and I want to be short. But I haven't been able to be short unless I buy implied volatility, which I've done, and I've made some money. I've lost a lot of money, to be completely honest. The last 6 months, I've done pretty fucking good. But my question is I don't think people realize the political risk that is in that name right now. Like, legitimately, that is bigger. If it gets sucked out of the index, it doesn't get the passive money anymore. And the passive
Yeah, but
money is what's so we run the IV up. We run the IV up to sell off to passive. We know the game. It's
J,
an easy game.
Jr. Excuse me,
Yeah.
excuse me. You used to work at S&P. It's already the gamma squeeze was important because that's what jacked up the market cap, which got it into the index. Once it's in the index, you're totally right. A lot of indexation bullshit, passive target date funds, all that kind of crap.
Yeah.
But the point is now in the index, all right? So the question is, what would it take to get it out of the index? It would have to fall a hell of a long way to get taken out of the index. Like
Why though?
so let me hold on. Let me ask the question, please. So for right here, right now, the next 6 months, a year, forget about whether it goes to 5, like Motorhead and I think it will, and it gets taken out. It should only happen, right? But for the next 6-12 months, just I'm having a hard time understanding how your question's relevant.
I think it gets sucked out of the index because I think Morgan Stanley was on the hook to keep it in the index because S&P and Morgan Stanley sleep together because I used to sleep with them, and that
Sorry, Jr. You're not talking sense. How is it going to fall out of the index in the next 6 months?
because of the fact that Tesla is creating a political. Look at what S&P.
I'm sorry, that kind of went off the rails a little bit. I apologize for that. All right, we're gonna bring the room to a close. Before we do that, I'm gonna turn to Ben and lastly to Motorhead. Ben, Motorhead, any final thoughts that you want to impart with the audience that they should keep top of mind? I mean, Ben, I'm glad we had a chance to meet. I know we've been in spaces a lot together, but I'm really impressed with your perspective. So, Ben, are there one or two key takeaways that you want to leave with people, and then last we'll go to Motorhead. Ben.
Oh, we used to talk a lot more before you blew up. Got all famous. I was just about to. I literally a DM typed out to you right now about an idea of a Tesla takeout. That is just not even remotely on my radar. Because again, I don't think they have clean books, and I think we have several empirical and practical points to basically point that out. So because if obviously if they were to become an M&A target at some kind of lowish price for like a takeout or a take under, they have to open up their books to outside parties. And when Elon really flinched on the Twitter deal was when they wanted to really start deposing him and digging into the nitty gritty of the stuff that he is involved with. And that's when he folded, which is what we predicted, what we traded on, made money on. That is when he flinched and folded, is when they wanted to depose him at length and at detail. That's when he backed out. And that's just Elon. That's not even the Tesla books. So I am very much against the idea that they'd be some kind of takeout targets, even at a much lower multiple, because again, at that point, they have to open up the books like full kimono to somebody that they don't trust, that isn't in their pocket. I think this is a full wire card scenario for anyone who followed that regulatory capture, kind of what we were speaking to earlier. That's again, I just do not think it could be a takeout target just based on the fact that I don't think their books are clean. I think their cash balance is bullshit, just based on their earned income on that cash balance, which is dismally low. So that's my closing thought on that.
Man after my own heart. More power to you, Ben. And Motorhead, You started this whole thing. You're going to end this whole thing. I want to thank you. This has just been extraordinary. You've been so generous with your time. And again, we've learned so much from you. So, Motorhead, the floor is yours.
Well, George, thanks, but you actually are the main man here. You put your money where your mouth is, and it's great to see your ETF up so much. But I just in a capital intensive business like the auto industry, I've never seen a car maker go up like this in terms of deliveries, whether it's true or frauded. I've never seen something go up in a straight line like this. And I've only seen something similar to this with Subaru between 2010 and 2016. So anybody who can download the data or look it up on Google, go look at Subaru and see what happened. And they peaked out at 17% operating margins in 2015, and they're less than half the value that they were at that time. So I think that's where we're heading with Tesla.
Thanks for that, Motorhead. This has been an amazing room. I learned a lot from so many of you in this room, and I want to thank all of you. It's funny. I've gotten a lot of heat for my Tesla views, but I'm an investor. I don't try to predict short-term wiggles. I'm a fundamental investor. And it's funny. I love how people try to invoke dictums from past investment greats, and they start invoking what they think Peter Lynch would. That was a hilarious one. I think it was today or yesterday. Peter Lynch would be buying Tesla. You think? I didn't know, when I finally could bring myself together and stop laughing, I politely rebutted the guy. And, he starts giving me grief. And someone wrote to my rescue with a follow-up tweet. It was something like, this is hilarious. The guy, the newbie investor who's bought into the narrative is trying to school the guy who worked for Peter Lynch about what Peter Lynch should be doing with Tesla. I mean, what saddens me about this whole thing is people don't know what they own. They really don't. Elon Musk, Tesla, really epitomizes everything that's wrong with this market. It only happened because so many things came. The confluence of factors. Too much money in the system, too much, monetary largesse, ESG, scam accounting, the CEO who likes to kind of travel outside the lines and captures the imagination of the public. This Tony Stark-like figure is going to save the planet.
Phony
Ben,
Stark.
yeah, Ben, you're against Tesla? Oh, you must not believe in climate change. You're a Neanderthal. You're a flat earther. And they make the fawning of the mainstream media and Kramer and CNBC and all these clowns know what you own. They don't do the work. Motorhead does the work. Ben does the work. I do the work. Who you gonna believe? Ben, Motorhead, or Ross Gerber and Kathy Wood? I mean, we won't even get into it, but the quality of her research is legendary. How bad it is. But this whole disintermediation, whereby if people really had to do the work, do the analysis on Tesla, I think they would reach a different conclusion. Instead, they give money to Kathy Wood. She runs with it. Or they just buy into a narrative or a story. And they can get away with it. Let's be real. I mean, when you're in a market where David Portnoy is able to run rings around Warren Buffett by pulling dice out of a bag and picking stocks, the ticker symbol corresponds to the letters he pulls out of the bag, and he's ridiculing Warren Buffett, and he's kicking his butt when it comes to performance. Did Warren Buffett get stupid all of a sudden? I don't think so. Or did the world go mad because there was too much money in the system? And it's that type of market environment that gives you Tesla. And I think it was a quote from Mark Twain. And I'm going to end on this. A quote from Mark Twain. I think I got it right. It's a lot easier to fool someone than it is to convince them that they have been fooled. Ladies and gentlemen, that is Tesla. That's the investing public. That's Tesla. So on that note, Motorhead, I can't thank you enough. This has really been a tour de force. I think this is the best room ever in the history of FinTwit when it comes to Tesla, and we have you to thank for it. And this room will probably be heard by 20, 30,000 people before it's all over. And I hope some folks will avert some losses by virtue of having listened to you. So Motorhead, thank you. You've performed a real public service. So
Thank you.
anyway, thanks so much to everyone here. This has been a great room. We'll do it again before too long. And I keep joking about the car company that shall not be named. Well, we're naming names and we're taking prisoners. So there you go. Hopefully I don't get thrown off of Twitter. If I do get thrown off of Twitter, you can start a GoFundMe page for me. You'll know what happened. All right, guys, take care. Everyone be well. Good night.
Thanks, George.
Good night.